the role of tech platforms also has to be brought about to credit in terms of the growth in retail participation that we have seen, and in the matters of control, as you mentioned, Deepak, they have given the tools to the Indian investor, the retail investor, and the more younger that they come in, the better for the broader investment journey, so that they understand how this journey progresses. On that note, before we wrap up this discussion, Milan, let me get your thoughts, because as Deepak mentioned, with great power comes great responsibility, and considering technology driven platforms like Upstock, they have made investing more accessible than ever. The question is, how can these platforms simplify the investment process even further for young earners and encourage them to start their investment journey from here on? If you can unmute yourself, Milan.
Sure. Can you hear me now?
Yes, we can. Go ahead.
So you're right. Players like Upstocks have been game changers for young investors, and there are multiple reasons for that. One being, there is such an intuitive design and navigation that even first-time investors are able to start their investing journey. In addition to that, we have initiatives like UpLearn, wherein and these are educational initiatives wherein almost every month we are doing more than 60 live webinars to help investors and traders learn about the market, whether it is just mutual funds or trading or personal finance. In addition to that, uh, uh, Upstocks also offers low cost investing, so nearly zero fees. In fact, no fees, but minimum investment amount is needed to get started. So that removes all the entry barriers for young investors. And with technology, with our internal research and understanding about mutual funds, for investors who are not able to get any financial advice, still they can get started using goal based investing, whether they want to just match nifty returns or are looking for some alternate investment vis-a-vis their savings account in a bank, or could be they want to invest in gold and participate the rally in the bullion markets. And in addition to that, as I mentioned earlier, the beauty of mutual fund investing is you can start small and gradually make it big with the power of compounding, which Harsh was talking about. So I just want to add here that he said that it takes a few minutes to learn about compounding, but 5 years to understand it. Probably I took 10 years to understand compounding, but because of influence of social media, there's so much of awareness through the experts that are there on social media, or maybe even influencers. Even children are started I have started understanding what are the benefits of long term investing. They are seeing India as a growing potential. Like my daughter, we gave her an option. She wanted to attend a K-pop concert in Singapore. We gave her an option whether she wants to attend that, or vis-a-vis I would give her, or I would invest 200 rupees on her behalf every month. So instead of making a choice, she negotiated with me that would you invest 200 rupees every month for my entire lifetime? So I said yes. So she chose not to go with the K-pop concert, but for long-term investing. I don't know how she figured out that it would have much more larger value in terms of the corpus built over 40-50 years. So
Absolutely. We have to give the next generation more credit for the awareness that they have. And your daughter is a great example of showing that she has long term thinking when it comes to, what goals she wants to achieve. And of course, the role that investments will play into that.
Gautam,
absolutely.
Yes,
if
Amit.
you if you really try to break this, and I just have a quick 2 minute on this, that if you do a 5 year SIP, the market value, suppose the return is 15% CAGR, if you do a 5 year SIP, the total value what you accumulate, 67% of that is still your principal, and
Hmm.
the balance is your appreciation. If you just extend that period from 5 year to 10 years, from the market value, 43% is your principal, 57% is your appreciation. And if you extend this to 20 years, the same SIP at a 15% CAGR, the beauty there, and everybody is talking of compounding, the beauty there is that out of the total market value, only 16% now is the principal and 84% is the appreciation. So the same SIP at 15% CAGR in a 5-year period, the principal is 67%. In a 10-year period, the principal is 43%. While in a 20-year period, the principal is just 16% and the appreciation is 84%.
Well, as we have always said, asal se pyara sood, right? That's what we've always heard from us. Asal se pyara sood. And as we have always discussed in this context, time in the market is more important than timing the market. So give your investments the time that they deserve so that they can build your wealth and, more importantly, fuel your goals. Gentlemen, I'm afraid we have run out of time. Thank you so much for joining us and providing your insights into building a strong financial foundation.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।